In a world where technology reshapes our lives, one innovation stands as a testament to the power of a visionary idea: Bitcoin. Born from the ashes of the 2008 financial crisis, Bitcoin emerged not just as a new currency but as a revolutionary concept challenging the very foundation of traditional finance. Join us on a journey through the history of Bitcoin, from its inception to its current status as a digital titan. Our story begins in 2008, during the aftermath of the global financial crisis. Amidst the chaos, an individual or group of individuals under the pseudonym Satoshi Nakamoto published a white paper titled Bitcoin, a peer-to-peer electronic cash system. This 9-page document outlined a revolutionary idea: a decentralized digital currency that operates without a central authority. Bitcoin was designed to allow online payments to be sent directly from one party to another without going through a financial institution. On January 3, 2009, Satoshi Nakamoto mined the very first Bitcoin block, known as the Genesis block. Embedded in this block's code was a message. The Times, January 3, 2009, Chancellor on brink of second bailout for banks. This message highlighted the financial instability that inspired Bitcoin's creation. With the Genesis block mined, the Bitcoin network was officially launched, and early adopters began mining and trading Bitcoin, setting the stage for a new digital economy. Initially, Bitcoin had no monetary value. The first transaction that gave Bitcoin a financial worth took place in October 2009. Finnish computer science student Martti Malmi, known online as Sirius, sold 5,050 coins for $5.02, valuing each Bitcoin at just $0.0009. This transaction was conducted through PayPal, which seems surprising today given the multitude of crypto exchanges available for trading Bitcoin. The first real-world transaction, now celebrated as Bitcoin Pizza Day, saw 10,000 Bitcoins exchanged for 2 pizzas, a transaction worth $648 million in today's market. The early days of Bitcoin were marked by curiosity and experimentation. Enthusiasts mined Bitcoins using simple computer setups, and the community around it grew, bonded by a shared belief in the potential of decentralized money. In those early days, Bitcoin mining was a simple affair. Anyone with a standard personal computer could participate. On January 3, 2009, Satoshi Nakamoto mined the very first block, known as the Genesis block, using nothing more than a regular computer. This block contained a reward of 50 Bitcoins, a sum that seemed insignificant at the time but would become legendary in the years to come. Throughout 2009, the Bitcoin network was a quiet place. Transactions were infrequent, often with days passing between them. The blockchain, the public ledger of all Bitcoin transactions, recorded these sparse activities, painting a picture of a fledgling network finding its footing. As the year progressed, developers started to create specialized mining software to optimize CPU performance. This software allowed miners to harness the full potential of their computers, making the mining process more efficient. Techniques like multithreading were employed, enabling multiple mining tasks to be executed simultaneously. Mining in 2009 was a solitary pursuit, with few participants and little competition. Miners could easily mine hundreds of Bitcoins per day with their standard computers. However, many of these early miners didn't foresee the future potential of Bitcoin. Some lost their private keys, while others discarded their mined coins, unaware that they were throwing away a future fortune. As Bitcoin gained traction, it faced numerous challenges. In the early 2010s, a digital drama unfolded in the depths of the internet. A mysterious online marketplace called Silk Road emerged, a marketplace known for facilitating the anonymous sale of illegal goods like guns, fake IDs and drugs, offering a haven for those seeking anonymity in their transactions. At the heart of this clandestine bazaar was a fledgling digital currency, Bitcoin. Bitcoin, with its promise of pseudonymity, became the lifeblood of Silk Road. As users from around the world flocked to this digital black market, they embraced Bitcoin as their medium of exchange. For 2 years, Silk Road flourished in the shadows. Its creator, known only as Dread Pirate Roberts, implemented clever systems like Bitcoin escrow to protect users from scams, and the cryptocurrency's notorious volatility. The symbiosis between Silk Road and Bitcoin was undeniable. The marketplace provided a major use case for the young currency, while Bitcoin enabled Silk Road's anonymous transaction model. But as Bitcoin's value soared and Silk Road's infamy grew, so did the attention of law enforcement. In October 2013, the FBI swooped in, shutting down Silk Road and seizing a massive hoard of 144,000 Bitcoins, worth $34 million at the time. The fall of Silk Road sent shockwaves through the cryptocurrency world, temporarily tanking Bitcoin's price and tarnishing its reputation. Despite these hurdles, Bitcoin's potential was evident. In 2012, Bitcoin's journey took a dramatic turn as its price doubled from $7 to $14 between June and August, attracting widespread attention and investment. The year saw the transition from GPU to ASIC miners, boosting mining efficiency, and culminated in the first halving event in November, which highlighted Bitcoin's deflationary nature and limited supply. This period marked Bitcoin's rise from a niche interest to a significant player in the digital currency space, setting the stage for its future growth. Venture capital started flowing into Bitcoin startups, and exchanges like Mt. Gox facilitated trading. By 2013, Bitcoin was gaining mainstream attention, with major publications covering it and the first Bitcoin ATMs emerging. The cryptocurrency's value surged from around $13 in January 2013 to over $1,000 by December of the same year. The news spread like wildfire. Coffee shops buzzed with chatter about this digital gold rush. Office workers huddled around computer screens, watching the price ticker with a mixture of awe and disbelief. Overnight, Bitcoin became the talk of the town. Early adopters rejoiced as their digital fortunes grew, while financial experts warned of a potential bubble. Media coverage intensified, introducing Bitcoin to a broader audience and sparking widespread curiosity and speculation. Behind the scenes, researchers later discovered that two bots, Marcus and Willie, had significantly influenced the price spike on the Mt. Gox exchange. The world was rocked by the sudden collapse of Mt. Gox, once the largest Bitcoin exchange. The Tokyo-based company filed for bankruptcy after losing 850,000 Bitcoins, worth about $473 million at the time, in a mysterious theft that went undetected for years, leaving thousands of customers devastated and shaking confidence in the nascent digital currency market. In the aftermath of the Mt. Gox collapse in early 2014, Bitcoin found itself on shaky ground. Its price fluctuated wildly between $300 and $800, leaving many to wonder if the cryptocurrency experiment had run its course. But Bitcoin, ever resilient, refused to fade away. As 2015 dawned, a sense of calm settled over the market. Bitcoin's price steadied, hovering around $200 to $300 for most of the year. Behind the scenes, however, a quiet revolution was brewing. Developers worked tirelessly to improve the network, while venture capitalists, intrigued by the potential of blockchain technology, began pouring millions into promising startups. 2016 marked the beginning of a new chapter. Bitcoin's price started to climb more consistently, breaking past the $1,000 mark by year's end. The upcoming halving event sparked speculation and excitement, drawing more attention to the cryptocurrency. Then came 2017, a year that would forever change Bitcoin's trajectory. In 2017, Bitcoin's value skyrocketed from around $1,000 in January to nearly $20,000 by December, driven by a combination of factors. A study revealed that much of this surge was due to market manipulation, with a single trader using Tether to buy Bitcoin during price dips, thus inflating its value. The excitement around Bitcoin's potential, coupled with increasing media attention and mainstream adoption, also played significant roles. As Bitcoin futures were introduced on major exchanges, institutional interest grew, further propelling its price to unprecedented heights. In the aftermath of 2017's dizzying heights, Bitcoin entered 2018 with a sobering crash. The cryptocurrency that had once touched the stars now plummeted back to earth, its value tumbling below $4,000. This period, dubbed the Crypto winter saw many fair weather investors flee, leaving only the true believers to weather the storm. As 2020 dawned, Bitcoin faced yet another challenge, a global pandemic. Initially, fear gripped the markets, sending Bitcoin's price spiraling. But then, something unexpected happened. As governments printed money and economic uncertainty loomed, Bitcoin found a new purpose. It became a digital safe haven, a hedge against inflation. By year's end, it had soared to nearly $29,000, a phoenix rising from the ashes. 2021 was Bitcoin's year of triumph. Riding a wave of institutional interest, it shattered all previous records, peaking at a staggering $69,000. Tesla's billion-dollar investment and El Salvador's bold move to adopt Bitcoin as legal tender fueled this meteoric rise. For a moment, it seemed the sky was the limit. But the crypto world is nothing if not unpredictable. 2022 brought new challenges as global economic headwinds buffeted Bitcoin. Rising inflation and interest rates took their toll, and Bitcoin's price retreated once more. Yet, even as it dipped below $20,000, the foundation laid in previous years held firm. As 2023 unfolded, Bitcoin demonstrated its resilience once again. Despite the skeptics, it clawed its way back up, ending the year at over $42,000. The approval of Bitcoin ETFs in early 2024 opened floodgates of institutional money, propelling Bitcoin to new heights. As of today, Bitcoin's price is around $62,000, reflecting its journey from an obscure digital token to a prominent asset. This value has been shaped by increasing institutional interest, broader adoption, and its perceived role as a hedge against inflation and a store of value. Bitcoin's path has been marked by dramatic highs and lows, but it continues to be a major force in the financial world. And that's a wrap on the history of Bitcoin. From its mysterious beginnings to its rise as a global phenomenon, Bitcoin has truly transformed the financial landscape. If you enjoyed this video, don't forget to like, subscribe, and hit the bell icon for more insights into the world of cryptocurrency. Thanks for watching, and we'll see you in the next video.